morning, good evening, good afternoon, students and traders. This is FX Passion broadcasting you live on YouTube, and this is Forex Trading Course 101. Hello TikTok. Sir, how are you? Everybody, trading is a learnable skill when we learn in the correct way the three pillars. Pillar number one is the market, pillar number two is the strategy, and the big one, pillar number three, is the trader. Hello Lucas, how are you? So talking about the market and the strategy, we are doing this with all these modules here: basic module, beginner module, intermediate module, advanced. Talking about the trader, everybody, we are going to learn about the trader in the Forex course 202. Okay, hello learn to trade, how are you? And talking about the trader, what do champion traders say, everybody? Champion beginner traders say, I am not going to live and die on a trade by trade basis. And somebody was asking 2 weeks ago, what is this trade by trade? This means that, you are freaking out because you have one loser, everybody, Oh, I just lost. Well, this is one trade, So what? Welcome to the club. Oh my gosh, I lost 5 trades. So what? Those just 5 trades, you have 95 to go. Everybody. This means that I'm not going to live and die on a trade, but, oh, I won. Don't be happy. Why not? Don't you want me to be happy? No, I don't want you to be happy. Why not? Because it's just one trade. You have 99 to go. Okay, everybody, so this is, somebody was asking, what does this mean? I'm not going to live and die on a trade by trade basis, Don't be happy and don't freak out, okay, based on one trade, If you have 100 losers, then okay, you can be sad, right? You can freak out. If you have 100 winners, then yes, you can be happy. But don't live and die on a trade by trade basis, everybody. And of course, this is from Mark Douglas, and my quote: when the market scares you, don't be afraid to do the right thing. What is the right thing to do? Ask for help. Ask for help. I know some of you, right? You are here with me for 3 years, 4 years, 5 years, and still, you are, and what else? Well, follow the rules, follow the strategies, follow the concepts. And remember, 90% of traders lose money in the Forex market worldwide. The webinars are not trading or investment advice. The webinars are for educational purposes only. And for homeworks or questions, you have the Gmail contact, the Skype contact, and you can follow me on TradingView. Okay, so that being said, everybody, how to find the original Fibonacci in a downtrend. Now, type in the chat, everybody, a currency pair so we can check the down Fibonacci. Okay, now I'm going to tell you what currency pairs are down. Talking about the direction, you can choose AUD CAD, AUD JPY, AUD USD, CHF JPY, Euro JPY, Euro USD, okay, GBP AUD not sure, GBP CAD no, GBP CHF no, JPY no, NZD CAD, NZD JPY, NZD USD, okay, and we are done. Those currency pairs have a down Fibonacci, everybody, on the monthly and weekly for sure. On the daily we need to check because the daily is moving, okay. First comes, first is served, so you can opt to check, Sir, I did the homework. Very good, congratulations. So you can check, you can choose, everybody, between AUD CAD, AUD USD, okay. No, AUD NZD, not AUD JPY, NZD JPY, NZD CAD, okay, NZD USD, Those are the currency pairs that are down with the Fibonacci's. And Lucas is saying, homework answer, I want to go long on Euro AUD weekly because on the monthly, the grandfather, we have the scenario up market structure until upper band. Very good. Excellent. Great job. Now here is the question, right? And we're going to learn about this on the Fibonacci, everybody. You know, what if we don't have enough capital, right? What if we didn't have enough capital to enter long from the monthly and weekly? And we are going to learn about the Fibonacci of the confirmation. We are going to learn about the contrarian Fibonacci, okay? In the meantime, everybody, let's talk about what? NZD USD, right? NZD USD, why not? NZD USD, NZD USD. We always start, right, from the monthly chart. This is the upper band, this is the lower band, okay? Finding the original Fibonacci in a downtrend. So, everybody, this is NZD USD monthly chart. Where should we start our A, everybody? The first circle or the second circle? What do you say? And we're going to write down, right? So A and B and C, A, B, C, and D. There you go, A, B, C, D. A, B, C, D. There you go. Where should we start, everybody? On the first circle or on the second circle? And remember, this is the monthly band, right? Upper band, and down in here we have the lower band. First circle, second circle. And this is critical, everybody, because if you pick the wrong circle, then you are going to have your sequence wrong. And if you start wrong from the monthly, guess what? You are going to start wrong from the weekly, and you are going to start wrong from the daily too. And don't be shy, there is no right or wrong, we are here to learn. Okay, and also remember, I have a 20 seconds delay on the chat. Now let me see, so what is the A, right? The A is the highest point, is the highest high, is the absolute high, okay, is a starting point of a pattern. So let's see which one is higher. You know, let me see, we're going to use the widget in here, and this is at high 0.88426, and this is at 0.88354235, right? Number one, exactly, everybody. Okay, so this is our first low. Fibonacci retracement tool. There you go. We are going to do something like this, right? So this is our A on NZD USD monthly chart. This is our B. This is our C. See, everybody? It almost touched the A, but it didn't. Now tell me which one is the D. Which one is the D? Is the first circle the D, or is the second circle the D, everybody? Which one is the D? What is the D? The D is the extension related to the C retracement. So A to B, B to C, right? Now which one is the D? The first circle or the second circle? Hello Allah, how are you? And remember everybody, the rules are clear, you know. Until the market touches the black one, the 0%, the A, you know, is still red, goes to red. Okay? And the market didn't touch the black one, not yet. Okay? The market can touch the black one, the market can touch the 0%, it should not break. If it breaks with 1 pip, then this is not valid anymore. Parsapur says number 2. Okay, very good. Anybody else? So we are going to move, you know, this horizontal line, and see everybody, it didn't hit, it didn't touch the red. So the correct answer is number 2. Congratulations. Okay, so this is our D extension. And what we're going to do, as always, A goes to C. Oh, but it's just for a few pips. Sure, why not? So A goes to C and B, horizontal line, goes to D. Okay, A, B, C, D, A, B, C, D. You can leave your Fibonacci in here if it's not confusing you. You can delete it, and we have the new Fibonacci sequence, right? A, B, let's see the chart, let's compress the chart, everybody. Okay, which one is our, so let's get rid of the widget. Which one is our C, everybody? Which one is our C? Is the first circle, our C is the second circle, our C is the third circle, our C, or is the fourth circle, our C? Everybody, circle number 1 in here, circle number 2 in here, circle number 3 in here, circle number 4 in here. Which one is our C? And again, the rules are clear. What is the C? The C is the highest point, not necessarily a high, inside the AB boundary, after the B, before the market hits the appropriate D extension. Passion, can you repeat please? Yes sir. The C is the highest point, not necessarily a high. It can be, it could be, but it's not necessarily, inside the AB boundary, after the B. So from B on, before the market hits the appropriate D extension. Parsapur number 2, TikTok 2, Allah 2. Yes, everybody, all of you are correct. So this is our C. Number 2 is our C. And right, this is our C. And our projected D is where? Everybody? The green, correct. Green goes to green. Okay. Now, should everybody listen to me? So let's talk about trading a little bit, right? Should you be long or short in here on the 1 hour, 2 hour, 4 hour daily? Well, 15 minutes maybe not, right? Because it's too small, but talking about the daily chart, the 1 hour chart, 2 hour chart, 4 hour chart, you know, 8 hours, should you be long or short in here? And why? And why, everybody? So one more time, you know, this is the Fibonacci sequence. A goes to B, B goes to C, and our projected, right? Our projected, the extension is down here. So we can color code it with different colors, you know, something like this, right? Passion, this is a difficult question, says somebody on the other streaming platform. You are not going to see this on YouTube, everybody. Somebody saying it's a difficult question. Well, it's really not. You know, we are learning how to use the Fibonacci's, and we are learning how to understand the Fibonacci's. Okay? So, and this is why I'm asking you, you know, should we be long or short in here? Now, what do we need to understand as beginner traders is that we look in here and we are going to feel fear, right? We are going to look at something like this, right? And we are going to have fear, right? So this is the answer, everybody. Based on the Fibonacci's, you should be short in here. Long? No, not long. If Fibonacci is a sequence, right, and we have extension, retracement, you should be short in here, everybody. Oh, but the market is going to hit the past support and this is scary. Yes, this is the skill, everybody. Remember, we are talking about this one here. You know, and this is the challenge. You can learn the concept of the market. You can learn the concepts of the strategy. We are telling you what to do. We are educating you on how the market works. We are telling you how the Fibonacci works, but you are not doing it. Everybody, true or true? And good news, it's not your fault. You are going to learn about the trader in the Forex course 202. Okay? There are some specific tools that are going to help you from the institutional world. Okay, everybody? So, talking about the Fibonacci, we should be short in here on the 1 hour, 2 hour, 4 hour chart. Oh, but I can trade. Yes, you can. Nobody's saying, everybody, that you cannot trade retracements in here, but we are talking about the Fibonacci specifically. And you know, when you see something like this and some FX passion is telling you to go short, you are going to get scared. You know, the market is going to scare you because you might went short and you lost, you know, and your brain, everybody, is not seeing the Fibonacci that it must go down, right? Your brain is seeing past support, past support, past support. And this is what is scary. This is why, this is the difference, you know, but it's a skill. We are not judging anybody. This is the difference between a professional trader and a beginner trader. The professional trader is skilled enough to short the market based on the Fibonacci sequence, if he or she is using the Fibonacci, of course. The beginner trader is learning about the Fibonacci's, you know. It makes sense for the beginner trader to short the market in here, but you know, we are not doing this. Why not? Because we get scared. You know, this is this, everybody. You know, you have lower lows, lower highs, lower lows, lower highs, and then you have higher highs, higher lows, higher highs, higher lows, and we are telling you, well, it's time to short the market in here. It's time to short the market because the market, it's not making higher highs anymore and higher lows. The market's making lower lows, lower highs. And it's simple to say, it's another story is to do it because I'm seeing this past support and I'm seeing this, whoops, and I'm seeing this past support and I'm seeing this past support and I'm seeing this past support, and oh my god, you know, I'm seeing all of these past supports. So I know that I should short the market, but my brain is seeing this and this and this. And you know, Lalo was saying one day, do you have the tools to fight homeostasis? This is homeostasis, everybody. Our brain is going to pick a fight with ourselves and is going to see obstacles, reasons not to go short in here. And this is scary. True or true? Or should I say true or not true, right? Well, I've been there, you know, I know that this is scary, everybody, but this is the skill. You know? How can, and somebody is typing on the other streaming platform again, how can I go short when the market's making higher highs, higher lows? Right? Well, this is the skill, everybody. This is the skill. The market is not making higher highs, higher lows anymore. It's making lower lows and lower highs. See? We should be short on the 1 hour, 2 hour. Talking about, we can go long and short, but talking about probabilities, we should short the market on NZD/USD. Structure is down, that higher high, it's a retracement, yes sir. So, par support, talk is cheap, right? Why aren't you short in here? Right? Yes, but, well, you know, we can talk together, right? We can analyze the market together, but why aren't you shorting? Everybody, why aren't you short on NZD/USD right now? Why aren't you short on AUD/USD? Why aren't you short on AUD/CAD? All of those currency pairs, talking about the Fibonacci, let's not mix apples with bananas. Those markets are down, are going short. You know? So just remember that this is the skill. You know, oh my god, there is a past support. So what? You had past support because I'm scared of the market. Thank you very much. Thank you for being honest, everybody. This is the skill. You know, what's the difference between a beginner trader and Warren Buffett? We all feel scared. We all feel fear. But we do this anyway. Make sense, everybody? You know, you must do it. Trade with somebody else, connect with somebody else, and tell your partner, tell your trading partner, would you be so kind and check upon me? I need to short the market in here. You know? So, talking about the Fibonacci, short, right? And this is the Fibonacci sequence on NZD/USD monthly chart, right? We have a counter trend line break in here. And as Parsapur said, you know, we have also a down market wave. If we short now, the logical stop loss would be on top of the A or the C. So talking from the, everybody, thank you for the question. So this is a non-negotiable rule, everybody, for every time frame. if you can, stop loss goes above or below the A. Okay, if you can. But many times we don't have enough capital, so we cannot risk 20% or 30% or 50% on the daily chart too. So we need to put our stop loss above the C. But if we put our stop loss above the C and not the A, we are increasing our chances of being stopped out by 80%. What is better? I don't know. Everybody. You are your business owner, okay? You own your account, you are the boss. The decision is up to you, okay? Well, oh my god, I don't have enough money, I don't have enough capital, I cannot put the stop loss above the A. But if I put the stop loss above the C, I'm increasing the risk of being stopped out by 80%. So I'm going to stay out of the market. But if I'm staying out of the market, then how can I make pips and money? What should I do, right? Great questions. I don't know. It's up to you, everybody. But based on the rules, if I have 5 entries, and I can enter some of them with the stop loss below the A or above the A, and I can enter others with the stop loss above the C, I would not trade the C's, I would trade with the A's. Does this make sense to you, everybody? We're going to have a lesson on the trading rules, how to trade the Fibonacci. Okay? But unfortunately, you are the boss. You need to be responsible, and you need to make your own decision, everybody. Parsapuri is asking one more question. We know where the C is and the best entry point is C, but when we recognize the C, the market has already moved on. What's the question? What's the question? Parsapur, thank you for the comment, but I don't see the question. If you would be more specific. Or maybe you are asking, can we still enter, The answer is absolutely yes. In A, the risk reward is bad, so in this scenario, C would be better. Great question. Great question. So you enter right now, you put the stop loss above the A, everybody, and clone. So if you put the stop loss above the A, would be 1, and as Lucas is saying, if you put the stop loss above the C, the risk reward ratio is better, right? So similarly to the great question that Parsapur asked, what should you do? If you put the stop loss above the C, you are going to enter 1 versus 4. You are going to risk 1 and you can earn 4, but at the same time, you are increasing your chances of being stopped out by 80%. So what is better? To put the stop loss above the C and go 1 against 3, 4 risk reward ratio, and to risk to be stopped out, or put the stop loss above the A and go 1 versus 1 and a half, 1 versus 1.2. What is better? And again, what is the answer? It's your choice, everybody. I don't know, I cannot tell you what is best for you. Make sense? I can tell you what I am doing. I am trading always with the A. Or let's not say always, but 80% of the time I'm trading with the A stop loss. Okay? But I have other traders that are doing completely fine with the stop loss above the C. You know, we have different styles, different strategies, different risk reward rules, different trade management, okay? Parsapur says, so we can enter at C. Yes, you can, because the market has already moved and we missed it. You can still enter, everybody. Okay? So, in this particular trade, you know, your entry to go short was here, and you have your entry to go short right now in here. You know? You can still enter from the monthly chart. Now, clone chart, and delete, and delete, and delete, 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 delete. So let's go on the weekly chart, right? Weekly chart. Let's compress the chart. Monthly bands and ABCD, ABCD from the weekly, right? We are going to start at the exact same point from the monthly. And if we can see that the market is going to break our down Fibonacci, then we are going to find another entry. So this is the A, right? The first low as soon as possible after the A is the B. Fibonacci retracement tool, something like this, you know. And as you can see, everybody, the market is going to hit the extension in here. So A goes to C, right? And B goes to D. So the market, moving forward, the market is going to stop us out on the weekly, right? If this is our A, the market is going to stop us out in here. Okay? So we are going to start from the next one. This is then the highest high, the absolute high, the starting point of a downtrend or of a down pattern. Everybody, are we clear why we are starting here? Please type in the chat yes or no. So this is the new start. Okay? When you practice the Fibonacci, you know, we need to reverse and start from here, but we know that the market is going to fall, right? So it's a waste of time doing this. We know that the market is going to fall. We just need to find the A. What is the A? The A is the highest high, is the absolute high, is the starting point of a pattern, and is this one. This is the highest high. Not this, not this, not this, not this. Okay? Okay, very good. A, B, C, D. A, B, C, D, A, B, C, D. Okay, arrow out. A, B. I'm going to ask you a question, everybody, if there is something interesting. A, B. Okay, A to B, Fibonacci retracement tool. We're going to connect A to B. Okay. And everybody, which one is the C? Is the first circle the C? Is the second circle the C? Or is the third circle? Which one is the correct C? And then moving forward, which one is the correct D? Is the first circle the correct D? Is the second circle the correct D? Is the third circle the correct D? Or is the fourth circle the correct D? Which one? So talking about the C, Parsapur is saying number 1. Anybody else? Let's address first the C's, right? Which one is the correct C? The circle number 1, 2, or 3? Ala says 1. Okay, you got it, everybody. What about, so yes, number 1. This is the C. What about the D? And I'm going to tell you it's a tricky question. Parsapur, the D is the fourth circle. Anybody else? Anybody else? Which circle is the correct D extension? The first circle, the second circle, the third circle, or the fourth? Passion, can you repeat the rules of the D? Yes, sir. The D is it's an extension that it's referenced or referred to the C retracement. So green goes to green, and this is our projected D level. Now, sometimes the market is going to hit our projection, the market is going to hit our D level, but it's not going to stop. And in this sense, the D extension is the first low in a down Fibonacci sequence, is the first low after the market hit the D extension, the D level. Lucas says D is the third. Parsapur third, it's the one. Yes, everybody correct. This is why? Because this is a low. But I don't see it as a low. Well, this is the best practice. Zoom in the chart. Beginner traders, I know some of you are not zooming in the charts enough. Right? And then you are crying, oh, why my Fibonacci is different than yours? Zoom in the chart. So this is our D extension, very good. We're going to adjust the Fibonacci. A goes to C. And so A goes to C and B goes to D. And B goes to D. You can cancel our previous Fibonacci, or you can leave it and you have the next one. A, B, C, D. Let's compress the chart, right? Let's compress the chart. Let's compress the chart. Okay, now this is our next C. This is the highest point, right? This is the highest point. A, B, C, D, you know, and green goes to green. So this is our D extension one more time, and A goes to C up in here, and B goes to D, right? Okay, Fibonacci retracements. And everybody, we didn't talk for the last 2 days. You know, we are doing all these Fibonacci exercises and we are, you know, learning how to draw. Did you notice, everybody, that so far every Fibonacci sequence was a winner? I mean, almost, right? This was the loser here, right? We lost in here, so we won 1, lost 1, but then, you know, this was the winner and this was a winner, and most likely the last one, this is going to be a winner too. So A, B, C, right? What is the C? This is our C point. Everybody, where is the D extension? The red, the blue, or the green? Everybody, the red, the blue, or the green? And you would not believe me, everybody, how trading is simple. Okay, it's not easy because we addressed fear. Trading is not easy, but how trading is simple, everybody. This was one hell of a trade. And it was predictable. And in my opinion, because I don't have the crystal ball, in my opinion, this market is going to continue to fall. Passion, what if you are wrong? Well, I'm wrong most of the time, but we are managing our trades. Okay? We are managing our trades. So, how can you be wrong? Well, I'm not talking about the entry, right? You know, I'm not talking about the entry. This entry was predictable. I'm talking about the long-term direction. Because, you know, we don't have the crystal ball. What do I know? Maybe the market's going to go like this and is going to break the A of the Fibonacci. I don't know this. But this was one hell of an entry. And we entered here and we entered on AUD USD, you have the same. AUD CAD, you have the same. NZD JPY, you have the same. If you are going to check, everybody, all of those currency pairs, from the weekly chart, you are going to see exactly, or at least similarly, you know, but you are going to see those kind of setups. D is the red, very good, yes sir. So this is our projected D extension. So if you enter right now, everybody, you know, don't you think that this is a great trade? I mean, why wouldn't you short the market? Oh, because the market is making higher highs, higher lows. Well, you are trading the Fibonacci. Make sense, everybody? So this is the scary part, right? On the daily, look here, everybody. This is what scares the beginner trader, okay? And it's normal. We've been there, done that. On the daily chart, you have an up market wave. This is the red one. And you are looking at the daily chart and you are seeing the up market wave, and you are seeing a short-term downtrend from the daily. And as a beginner trader, you are seeing this as a story. We learned about different stories. Okay? So I'm telling you, why wouldn't you short the market? Well, I'm scared, you know, I prefer to go long on this one, not short. And it's cool. It's understandable. Why? Because this is what you are seeing. And everybody, one more time, what is the skill? The skill is a professional trader, and it's just an example. A professional trader is going to see the same thing as a beginner trader, but he's going to trade this story. Oh, right? Now I understand. Okay? But passion, can we go long short term? You can't go long short term. Look at the green. Where you would go long short term? I mean, if we are talking about the weekly and the daily chart. The market's making lower lows, lower highs. Yeah, but it's a retracement. Well, yes and no. Hear me out, beginner traders. This is the skill. This is a retracement. You know, if you reference these lower lows, lower highs to the market wave on the daily, yes? So it is a retracement. But the green one, it's not a retracement if you reference this price action to the Fibonacci sequence. Can you understand this? But between the Fibonacci and the market wave, talking about probabilities, who is stronger? Parsapur is saying, so if we want to short now, is it okay to short right now or better to wait for a counter trendline break on the weekly chart? Great question. So the best answer is according to your strategy. If you are using everybody candlestick formations, counter trendline breaks, you know, Ichimoku, parabolic SAR, stochastic, MACD, wait for those signals. Look at same questions. Can changes in monetary policy interfere with the long-term trend? No, it can't. Lucas, thank you very much. Great question. No, it does not. Only the break of the contract, everybody. I'm going to show you the break of the contract. Euro CHF maybe, if I recall. 2013 Euro CHF maybe. Oh, whoa, whoa. See, this is it, Lucas. This is the break of the contract between the two countries. It's called the flash crash. So the market dropped. Oh, let me see the calculator, right? Calculator. So 119794 minus 84868. Not to talk about pipettes, everybody. The market dropped 34,000 points in 2 hours. Okay, this is when countries break their contract between the imports and exports, and they are quiet, you know. When this happened, Europe was starting to get awake, you know. Japan was closing the stock market, meaning people went home. USA and Canada were sleeping, and Brazil was sleeping. You know, wiped out more than 6,000 big brokerage houses and investment banks all over the world. You know, still today there are still some lawsuits running, you know. Investors being angry, traders being angry. You know, the broker didn't respect my stop loss. How can he or she or it? I mean, come on, 334,000 points in 2 hours. There was no liquidity provider to take the stop loss, everybody. But again, you know, there is regulation. What is regulation for? In the developed countries, you know, it was not your fault, so you don't owe any money to the broker. You know, institutions, between them, they have a fight, but retail traders, you know, there is regulations that, okay, you know, it's not your fault. How can be? That was that was crazy. Yes, it was. I have some friends who lost banks and money, and I have some friends who lost jobs around the world. It was crazy. But don't bother, you know, don't worry, Lucas and everybody else. You know, if Powell is going to change the interest rate for 0.5% or 3 basis points or whatever, this is not going to, this is something different. So don't panic. Okay? We are going to have a class about news trading, and any policy news has an effect of maximum 7 hours. Okay. Now going back to the original question, you know, why wouldn't you go short on the Fibonacci? And okay, oh, because I'm scared of the market way. Well, this is the skill. Passion, can I go long? You can do anything you want. Why would you go long if the market's making lower lows, lower highs? And somebody is yelling, oh, it's not making lower lows, lower highs, it made a higher high. The market made a higher high, so this high is higher than this high. Agreed? Somebody is yelling at me on the other streaming platform, you know, oh, it's not making lower lows, lower highs, it's making high, it's made a higher high. You can do anything you want, everybody, but as far as I'm concerned, this market has a down Fibonacci, original one on the weekly. It broke the uptrend line, you know, great risk reward ratio, and the market's making lower lows, lower highs, relevant ones. Oh, but it made a higher high here. Yes, it did. I agree with you. Yes, it did. You know, you can do anything you want, but we need to think in probabilities, everybody. 1 plus 1 plus 1 in the financial market is not 3. 1 plus 1 plus 1 equals or 5 or minus 10. What do you mean? It's a probability choice. If you go long in here, or you have a probability of plus 5 if you are correct, or if you long in here, you have a probability of minus 10 if you are not correct. So you can lose big in here if you are not correct. Passion, how do you know if you are correct or not? Trade what you see. And just, we did this exercise, everybody. Look at how many tools and how many convergences you have to go long, how many reasons you have to go long, and how many reasons you have to go short. Okay? So, NZD, USD, everybody, I'm going to go a little bit quicker. Daily chart, okay? Daily chart, daily chart, daily chart, daily chart, starting point, daily chart. Okay, so we're going to start from the same point as from the weekly. Okay? Just to come to a sequence, so A to B, hopefully I'm not going to make any mistakes. A to B, this is the daily chart, ABCD, ABCD, let me see, is this ABCD, so Fibonacci retracement tool, not this one, 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 ABCD, if I'm not mistaken, ABCD, Fibonacci retracement tool, ABCD, and ABCD, not a low, ABCD, green goes to green. Let me see if the market is going to break our Fibonacci. Not yet, not yet, so ABCD, ABCD, find the low, not a low, come on JForex, don't get up, okay, not a low, not a low, ABCD, and now I believe the market is going to break our down Fibonacci, or maybe not, right, come on, so the market did not break our down Fibonacci, and so this is our C point in here, and our D extension from the daily this time, because I cannot compress the chart that much. Fibonacci retracement, A, B, C, D, right? Wow, great. So it's similar to the weekly, everybody. So this is the sequence on the daily chart. Now monthly, ABCD, weekly, ABCD, daily, ABCDC. This was a hell of a trade. It still is, from the daily chart, right? Now let's zoom in. Let's zoom in. This is the daily chart. If you are trading the Fibonacci's, everybody, counter trend line break in here to go short, counter trend line break in here to go short, counter trend line break in here to go short, and the last one, counter trend line break to go short, right? So from the daily standpoint too, you know, this is the risk actually, and this is the reward. 1 versus 2.5. Great risk reward ratio. It was almost 1 versus 3. Will you show again where did you start drawing the daily Fibos? Yes, from the weekly. I start the daily Fibos from this one. Par support, okay, from the weekly, everybody. You should too. This is a concept how we draw the Fibonacci's. Okay? So from this one. So this was what? This was 2014 high, and this should be 2014 high. Okay, this is the weekly and this is the daily. We start from the same top, everybody, and you are going to do this on all currency pairs, all time frames independently, if the Fibonacci is up or down. Okay, everybody, see you back tomorrow. Until tomorrow, stay strong and draw the Fibonacci's with passion. This is